Good afternoon and welcome to Matters Financial and Geopolitical from a Frontier. Let me start with Malcolm Gladwell, who said the tipping point moment in an epidemic is when a virus reaches critical mass. It's the boiling point. It's the moment on the graph when the line starts to shoot straight upwards. Notwithstanding some trend improvements in Italy, people are grasping at that, but I don't think it's worth grasping at. I think that Gladwellian moment has definitively arrived wherever I'm looking, and I think we're looking in the rearview mirror when we look at some of these numbers. Daily charts updated, over 33,000 new COVID-19 cases and 1,600 new deaths were reported in the last 24 hours. That's Zorina Q. Now, Repubblica says Italy's virus cases are 10 times higher than reported. And frankly, I believe that. And just consider that, plug that in. For each case that's visible, 10 are invisible at the moment. And that's why I said in my last article on the 22nd of March, we're looking into the rearview mirror, whether it is Africa, whether it is Europe, whether it is the United States. China remains a mystery, and I'm looking into it, but patently, on the face of it, their numbers make no sense and therefore are nonsense. What's certain is that the whole global economy has been hit by an insidious, literally invisible circuit breaker. What if whatever it takes isn't enough, asks Business Week. The COVID-19 disease is more than a health crisis. What seemed like an alarmist scenario a month ago, a global recession, now appears a certainty. As governments restrict travel and close restaurants while manufacturers prepare for temporary shutdowns, major economies are now experiencing a hard stop. We are seeing a collapse of economic activity as countries try to get a handle on this disease, Obstfeld says, pointing to the plunge in industrial production and consumption in China as evidence of what lies ahead for Europe and the United States. Following a March 16 video conference call, the leaders of the Group of 7 nations vowed to do whatever is necessary to protect lives as well as livelihoods. The problem is it's not about a monetary response. The Dow Jones Industrial Average closed down 13% on March 16 as US markets recorded their biggest single-day fall since the 1987 crash. However, we're getting some kind of rebound going on at the moment. The G7 statement came just hours after the US Federal Reserve announced its second emergency rate cut in 12 days. Raises an ominous question. What if this time whatever it takes is not enough? At the Institute of International Finance, chief economist Robin Brooks and his team have been tracking huge outflows of money from emerging markets that could trigger old-fashioned balance of payments crises similar to the ones that engulfed Mexico and most of Asia in the 1990s. Obstfeld says the sudden stop in economic activity hitting Europe and the US now looks a lot like an accelerated version of what happens in a classic emerging market crisis when countries abruptly lose access to capital markets. Bottom line, governments have announced trillions in stimulus measures to blunt the economic hit from the coronavirus. The medicine might be more potent if their actions were coordinated. Maybe. 22nd of March, that was on Sunday afternoon, I wrote an article, COVID-19 and a rolling sudden stop. Deutsche Bank's Torsten Slock argues that open table reservations are a good proxy for what's happening with discretionary spending and the global economy as a whole. That's via Robin Wigg. And there indeed you see the sudden stop. I wrote previously, a non-linear and exponential virus represents the greatest risk to a control machine. In point of fact, policymakers somehow still believe in their linear minds that more free money, more rate cuts will resuscitate the patient, which is like a patient etherized on the table. Remember when money printing in stocks was supposed to be positively correlated? Welcome to the real world, Tavi Costa. And as I said, the global economy is coming to a sudden stop. We are moving from a world of hyper-connectedness to a world of quarantine. A complete quarantine is the only way to vaccine this 21st century world of ours. World's economists and policymakers are flummoxed by the exponential and multiplicative nature of the COVID-19. The Fed is now 0 for 10, maybe 1 for 10 now actually. Every policy announcement has been sold, Northman Trader. The virus is not correlated to endogenous market dynamics, but is an exogenous uncertainty that remains unresolved, and therefore it is a black swan. I wrote on the weekend because I got bullish about gold a few weeks ago and admittedly then witnessed the most almighty sell-off I've ever seen, and was horrible for about 2 weeks. It was waking up in the middle of the night. It was unbelievable. It got as low as 1460. But I still believe gold will soon turn viral to the upside, and probably did yesterday. I'm looking for more than $2,000. And I'm convinced we're going to get there very quickly. Gold rallies as Goldman sees inflection point after sell-off. Know what isn't unlimited? Gold. That's what. The print shop, this is Scott Burke 777. 24th of February, I got very bullish about gold, and then we had that whole margin call collapse the price. But the point I made then, I think applies to now. My timing was off, obviously. At this point, I would venture gold is correlated to the coronavirus, which is set to turn parabolic and is already non-linear and exponential. Or as that great French thinker Paul Virilio described it, it has escape velocity. It does now. This is a gold chart from Trader Blitz when we were at 1570. We're now at 1583. Gold pops above $1,500 as the US Fed announces new and very aggressive measures. These were the headlines via Ole Hansen. As I said on the 24th of February, and I was referencing the stock market, a rate cut, I said, or even 4, will produce a dead cat bounce and then a dynamic move to the downside. Policymakers, I said, cannot vaccine the market with rate cuts. And I described it as non-linear and exponential. The Spanish flu was so devastating because they had yet to discover tax cuts. This is TG Macro via David B. Collum. As I said a few weeks ago, a V-shaped recovery is a fantasy. And then in my latest article, I was talking about the NYSE, and I said it's perfectly correlated, and I mean no offense to my American friends, of whom I have many, is perfectly correlated to the president's competence or incompetence. To watch the White House daily briefing is to understand that the control machine has a novice, a hubristic POTUS in charge of the console, and the New York Stock Exchange cannot tolerate it a moment longer. The NYSE is perfectly correlated to the president's competence-incompetence. Home Thoughts, Andy Warhol, one of my favorite American artists, green Coca-Cola bottles. This is via the New Statesman. He's got an exhibition at the Tate. I wonder if it's still open. The narcissist in chief watches TV to see what people are saying about him. Astro Lane. This is hubristic, this is narcissistic, this is Shakespearean level tragedy. Prime Minister Boris Johnson gave an important update on the coronavirus and basically is now imposing a lockdown. We're seeing rolling lockdowns across the world. Gary Kasparov, I'm a firm believer in the free market, emphasis on free, not one that is hijacked and hostage to the stock market. You need healthy, secure working people now and next month and next year, or it's a Great Depression. The president is promoting this idea that people can go back, and basically that's the whole herd immunity strategy that was basically negated by the Imperial College research that I spoke to you about before. But if you want to, go and have a look at that. My article, I'm just going to touch on a few points. Over the weekend, I talked about how the internet has collapsed the world and shifted time into real time. With every natural disaster, health scare, now comes the inevitable information bomb. Live feeds take over real space, and technology connects life to the immediacy of terror, the ultimate expression of speed. Paul Virilio. I said what is clear now is that the Malcolm Gladwell moment has definitively arrived. The tipping point moment in an epidemic when a virus reaches critical mass. It's the boiling point. It's the moment on the graph when the line starts to shoot straight upwards. It took only 4 days to go from 200,000 to 300,000 cases. And that's why I've written before, viruses exhibit non-linear and exponential characteristics. The number of countries with at least 500 active cases is increasing every day. The images coming out of Italy are apocalyptic and heartbreaking, and contaminating our minds like the virus itself. The UN's Economic Commission for Africa reckons the continent's average GDP growth will fall to 1.8% this year from 3.2%. I calculate sub-Saharan Africa will contract in 2020. 2nd of March, I wrote about the COVID-19 and specifically about sub-Saharan Africa. 1st of March, I wrote about the origins of the coronavirus. 24th of February, all these links are on the front page of the website rich.co.ke or on Rich Wrap-Ups. 24th of February, I said the viral moment has arrived. Viruses exhibit non-linear and exponential characteristics. As I said, it took 3 months to reach 100,000 coronavirus cases globally. It took 10 days to reach 200,000. It took 4 days to reach 300,000. And let me have a look at John Hopkins, just tell you where we are now. We're 381,621. We'll be through 400,000 as early as today. 3rd of February, I was writing about coronavirus, non-linearity and exponential risks. October 2014, when I started first looking into this because of Ebola, I said it is about escape velocity. Viruses exhibit non-linear and exponential characteristics. And you know, that whole flu crowd saying, oh, it's just 2 cases, or it's just 10 more people die from it. They didn't understand that. And some of them still don't. It's just extraordinary. What's certain is that the whole global economy has been hit by an insidious, literally invisible circuit breaker. World economists are flummoxed by the exponential, multiplicative nature of the COVID-19. The virus is not correlated to endogenous market dynamics, but is an exogenous uncertainty that remains unresolved, and therefore it is a black swan. This is non-linear and exponential. US stocks hit new coronavirus low, erasing more than 3 years of gains, but currently are looking as if they're up about 786 points in pre-market trading. I can guarantee you we're going to close down today. A V-shaped recovery is a fantasy. Nearly 80 countries are already requesting IMF help to battle the coronavirus. We stand ready to deploy our $1 trillion of lending capacity. They're going to deploy it all. Trump says there will be more death and that keeping the economy shut rather than letting coronavirus spread. Wow. So he's going down the herd immunity route, or is promoting that idea. It will be a debacle. The denouement will be people zombie-like going and walking to the White House and saying, what did you do? Did this really just happen? Jason Kirrell, this is from those White House briefing. The White House briefing is just extraordinary television. As I said over the weekend, to watch that daily briefing is to understand that the control machine has a novice in charge of the console. And the New York Stock Exchange itself is sending the purest message. It cannot tolerate it a moment longer, and is perfectly correlated to that news conference. If it's not credible, the stock market crashes, and it hasn't been credible now for weeks on end. Currency markets, let's have a look. Euro dollar, 108.28. There's been a little bit of a sell-off in the dollar. Dollar index, 101.572. Japanese yen, 110.73. Swiss franc, 0.9775. The pound, 116.46. What an incredible story the pound has been. The Australian dollar, where is that? 59.40. India rupee, 76.1825. That must be a record low. South Korean won, 12.4971. Brazilian real, 5.1433. Egyptian pound, 15.75. South African rand, 17.6185. Dollar index, I know there are a lot of dollar bulls. There's this theory, the dollar milkshake theory, and you always get this in crises. You get a rush back into the dollar. But essentially, the US cannot afford the dollar to strengthen much more from here. And what they're signaling is they're going to do everything. They're going to print like crazy. So if you're now buying the dollar, you actually got a finite time on that trade. We could see another massive dump and a bigger rally in the dollar, but ultimately, I don't think we're going to be higher at the end of the year than where we are now. Euro dollar, let's have a look at where that is. 108.29. The most important currency to watch right now is still the renminbi, I think. Where's that? 709.10. They play around with it a lot, but it's headed towards 750 now. Remember this, the basic measure of banking stress, 11-year high and going vertical. New high today, that's Bianco research. Crude oil, funnily enough, was having a good rebound earlier, $24.64. There is no demand, it's a hard stop. Where is all this oil going to go? Storage is now full, so essentially it's going to spill everywhere. Iran is the only equity market in the world with a positive US dollar return. Isn't that incredible and a plot twist? In the past month, the Mexican peso has fallen 25%. Indonesia's rupiah has fallen 17%. And South Africa's rand 15%. Why are these moves so big? Asks Robin Brooks. Typically, foreign investors sit tight and don't sell their EM holdings. Not this time. Huge and unprecedented selling that swamps 2008, 2009 and 2018 EM sell-off. I wrote about this in an article in September 2019, the China Emerging Markets Frontier Feedback Loop Phenomenon, I called it. Quite a mouthful. This phenomenon was positive for the last 2 decades, but has now undergone a trend reversal. The fallout is being experienced as far away as Germany, Inc. The rand is the purest proxy for this phenomenon. African countries heavily dependent on China being the main taker are also at the bleeding edge of the phenomenon. The pressure point will not ease soon, but will continue to intensify. I was proven right. Sub-Saharan Africa, I calculate Sub-Saharan Africa will contract in 2020, and it would not be an exaggeration to say that we're staring into the abyss of a zombie apocalypse. And I'm not wrong. Africa needs $100 billion of stimulus to combat the virus. This is according to Bloomberg. Needs an immediate emergency economic stimulus of $100 billion to combat the impact of the coronavirus pandemic, and almost half of that could come from waiving interest payments for countries on the continent, according to the United Nations Economic Commission for Africa. They waive interest. No one's ever going to touch a Eurobond again. The waiver should include not only interest payments on public debt, but also on sovereign bonds, it said. Government debt as a percentage of GDP in sub-Saharan Africa has doubled in the past decade and largely wasted. But countries in the region will have to shelve plans for further Eurobond issuance as yields surge and the spread of the coronavirus limits travel. External debt payments consumed an average 13% of African governments' revenue before the outbreak, data compiled by the UK-based Jubilee Debt Campaign showed. Given the limited health infrastructure and the fact that most of the pharmaceuticals and medical supplies consumed in Africa are imported, they called on the international community to support the upgrade of the health infrastructure and to provide direct support to the existing facilities. Without coordinated efforts, the COVID-19 pandemic will have major and adverse implications on African economies and the society at large. So essentially, if that is the solution, it will shut the sub-Saharan African Eurobond market for sub-Saharan African issuers, though it's shut as it is because of some of those bond yields I showed you a couple of days ago. Have a look at that article I wrote in the Africa Report, Debt, Virus and Locusts Create a Perfect Storm for Africa. Okay, look, we're now moving so fast. We're moving into the exponential phase. The nothing, cluster, and boom. We're coming into the boom phase in African numbers of this COVID-19. This was a data point from yesterday, 1,396 confirmed COVID cases in Africa in 43 countries. We've got substantially more than that now. From midnight on Thursday, 26 March, until midnight on Thursday, 16th April, all South Africans will have to stay at home. This was President Ramaphosa. He spoke very well. But essentially, as I said in my article, we're looking into the rear-view mirror when we're looking at these numbers. And now we're entering a rolling sudden stop all across the African continent, the United Kingdom, many other places. Everything the light touches is our kingdom earth globe. This is Zororo Makamba, only about 34 years old. This was from his Instagram feed via Kirsty Coventry. He passed away. The numbers reported in Zimbabwe are 2 cases, 1 person has passed away. Now, you know, if you listen to this podcast, that's not possible. And therefore, at the lowest, there are hundreds of cases now in Zimbabwe. I asked in my article, how much do we need to haircut sub-Saharan African 2020 remittances? 10%, 20%, more than 25% is what I think. 4 government ministers have contracted coronavirus in Burkina Faso, and it's spreading rapidly. And they got a lot of local transmission. On the 2nd of March, I wrote an article about COVID-19 in sub-Saharan Africa, and I said the first issue is whether the coronavirus will infect the continent. That is no longer an issue, that's been established. And I said then we know that the coronavirus is exponential, non-linear, and multiplicative. And quoting epsilon theory, what exponential disease propagation looks like in the real world. Real world exponential growth looks like nothing, nothing, nothing. Cluster, cluster, cluster. Then boom. We're now entering the boom phase on the continent. There are some countries easy to establish, like Ethiopia, which are presenting unbelievable numbers. They're not right. As I said, on the 27th of January, when I looked and modelled what was happening, I have to assume the coronavirus is already in Africa, but just not diagnosed. That's erasing certainty, and I'm not wrong. 3rd of February, I said Bole and Addis is the epicenter of China-Africa connectedness. And somehow that China-Africa infection has been suppressed. How? I don't know. Bill Gates said this disease, when it comes to Africa, will be more dramatic than in China, and I don't want to play down what is happening in China, he said. And the point he's making is seen in this video from Daddy Hope. This is how patients going to Wilkins Hospital are being picked. Ambulances don't even have stretchers, but Mthuli Cube and Mnangagwa are happy to allocate $16 million to buy luxury cars for ministers who already had cars. There is no water at Wilkins, folks using buckets. Have a look at that, and you can see what our problem is on the continent and why I called it a zombie apocalypse. 24th of February, I said we're past the point of no return. As I said, quoting TRVRB, we believe that international seeding events started to occur in mid-January. Thus, we have a critical 10 weeks from then to late March to contain these nascent outbreaks before they become sizable. In Africa's case, no one bothered. And I did an interview with Bruce Whitfield, extreme concerns about coronavirus making landfall in Africa. South African all shares down 32.96%. Year to date, dollar rand at 17.70, but headed to 20. Egyptian pound doing quite well, 15.722. EGX 30 down 28.03% year to date, but I saw that the Egyptians are talking of buying the stock market. Nigerian all share down 19.15% year to date. Ghana Stock Exchange down 3.46% year to date. Unconfirmed reports that the flag of the Islamic State has been hoisted over Mocimboa de Praia in Mozambique. If true, would suggest that the town has now fallen under insurgent control. Polsec analyst. The point about that is that's where all the gas is in Mozambique, but given gas prices right now, the price might not be worth it. Tourism is stopped out in 2020 all across the continent. In Kenya, the Central Bank of Kenya lowered its central bank rate to 7.25% from 8.25% and reduced the bank cash reserve ratio to 4.25% from 5.25% to increase liquidity to the economy. They're projecting that economic growth will halve to 3.4% in 2020 due to COVID-19. I project it's going to be at 0. Yields on local currency Kenyan bonds spiking as well, and banking stocks being hammered. I spoke about this negative feedback loop because all the banks are holding huge amounts of Government of Kenya bonds. ABSA Bank Kenya, the old Barclays, reported unchanged EPS. Loans and advances to customers was up 9.89%. However, they booked exceptional items of 1.528 billion shillings. Had they not done that, they would have produced some good results. Because they took that charge, they reported an unchanged earnings per share and maintained the dividend payout ratio. Excluding the one-off exceptional item of 1.5 billion shillings related to the transition expenses, our normalized PAT is 8.5 billion shillings, or up 15% from 2018. So those were pretty good results. NSE 20 has dropped below 2,000, a 17-year low. The markets are the message. Kenya shilling is at a record low 106.75. And this could run away to the downside. Nairobi all shares down 22.96% year to date. The NSE 20 is down 26.21% year to date. Stay safe.